Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, August 22, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We have what looks at first blush like a reversal candle. It is, in fact, an on-time type of situation. I'll mind you, above all the moving averages, the trend is your friend, but after a run from August 5th all the way up near the all-time highs, it's no wonder the market decided on a one-day pullback so far. That's all it is so far. It's a one-day pullback, not on an excessive volume on the upside, not a real bona fide reversal. It was just a down day after approaching the vicinity, and this is the way we're going to look at it. Remember, we're the umpire calling balls and strikes. We're looking at this thing rationally, not with a bias. We don't insert our hope into the market. We're looking at this as it was a down day as they approached the neighborhood / vicinity of the all-time highs. That's it. Nothing more, nothing less. Tomorrow, by the way, Friday, will be an interesting day. Don't forget, we have the Jackson Hole Banker Boondoggle on today, tomorrow, and I believe probably through Saturday. Either way, it's the Jackson Hole Banker Boondoggle, where we've got a bunch of stuff going on as it relates to the Fed, interest rates, what are they going to do, all that stuff. Any movement in the market can easily be attributed to using the Jackson Hole Banker Boondoggle as an excuse. Do we have anything going on in the weekly chart perspective that we haven't already seen this week? Not really. Again, same routine. They approached the all-time high. They didn't quite get there, and they've pulled back from the neighborhood so far of the all-time high. Staying above last week's close will remain in a bullish position. That's technical school stuff 101. And there's another thing I want to point out today, and you'll see this when we go to the notes from inside the numbers. I reminded traders in there as the market started to crack a little bit and trade lower today. Remember, yesterday we had the phony shenanigans tail candle. That's yesterday's low. The market was never down there yesterday. That low resides at 554.73. Today's low isn't quite there yet, 554.98, but it's not that far away, and we just talked about it last night. We'll issue that of funny how that works. We're going to find out in short order whether today's activity was a one-day wonder or is this going to be a lower high. You have the all-time high, and there's certainly a chance that all they're doing here is putting in a lower high, and this is going to result in a downward move of some kind of retracement magnitude. Whether partial or the whole darn thing, we won't know until we know. Right now, we have a lower high, but if they start to eat time off the clock up here and just go back and forth for several days, then they will be building energy to make another push higher, to go higher than the all-time high, make a new high. So we're watching, we have some bogeys, and the whole thing really changes if they were to, and it's a big if, capital I, capital F, but if they were to give up this low here, 548.88, and start getting into this area below the moving averages, that will change the complexion of the tape. That's just a little bit of a broad stroke. We'll see what happens if and when they do that. Right now, all it is a one-day down day. Switching over for a second to the Lazy Swing Trader Automagical Algo System. This is a target I thought we had a chance to hit today. General Mills, this is a second profit target up at about 71 and a quarter. It's already a risk-free, emotionless trade. We have taken a profit already. Therefore, it's what we call a free ride. Buy alert was issued 63.41. Just in case anybody was wondering. Lazy Swing Trader Automagical Algo System. Now, let's focus on inside the numbers. Right of the vertical is today's activity. That's the primer. Did anybody make money today in the live trading room in Inside the Numbers? Post a comment under the video. Help the other folks out, the brothers. Help a brother out, those traders looking for answers, those traders looking for somewhere they can find value, those traders looking for somewhere they can learn and earn at the same time, trade over someone's shoulder, my shoulder. Help a brother out. Help those traders looking for help. Did you make money today in the live room? Post it under the video. Inside the Numbers. Post it. I'm going to point out a couple of important things. What I urge you to do is pause the video, go back to the chart to double check the work. Looking to the northbound lane, as long as price is above the flat line, the door opens for the next leg higher toward a resistance zone that begins at 562.85. 562.85. Need I say more? This is on the board at 0 dark 30. You see where they opened up today. They opened up, went right into the zone. We had another number, which you'll see in a moment, a little bit higher. This is 3 days in a row. We got a nice, juicy short right out of the gate, and what we call in the trading parlance, no heat. Pause the video, read the notes, go back to the chart, and double check the work. Let's keep it simple, 9 o'clock, just to reiterate what's going on. 562.85 is a target, magnetic, and overhead resistance. What if they get above? Well, 563.40 is the next place above. It's not that far away. No need. They didn't really get there. They just got rejected from our resistance place. Pause the video, read the notes, go back to the chart to double check the work. It's all in here, everything you need. Here's a nice trade, 946, right out of the chute. The rest is trader's choice. Holding a trailer is fine. Short from the resistance zone. Funny how that works. Pause them, read them, go back to the chart to double check the work. As you can see, going out into the end of the morning session here, we put some stuff of interest up on the board, namely 556.95 is the next number down. You can see that right here. And you see that before as well. You see it down here at 946 or 1146, sorry. You see it over here at 1134, 556.95. Came up short here, hit it here, gave a bounce, and then it became resistance when they got underneath it. And to the end of the day, that became overhead resistance. But look where they bounced up to, 560.10. Remember that number from before? Sure you do. The numbers work. Pause them, read them, go back to the chart to double check the work. What about stocks on the move? What did we have today? Well, Netflix is off the board, didn't hit its entry objective. We had BJ that did. TD's off the board. Snow hit its entry objective. Urban Outfitters and AAP did not, so we'll not look at those, but we will look at the ones that did. How did we do in BJ's today? $80.49 was the target entry. They hit it. Rocketed back in the other direction a little bit, gave you the trade, couple of bucks. Nice participation in the live trading room Inside the Numbers on BJ Wholesale Club. It's kind of like Costco, but not. That was the first number in Snowflake. They came close. We talked about this in real time in the live room. Came close, bounced away. A little bit of taking the luster off that number. And then they continued on to the second number, which is down at 118.51, bounced off of 118.51 back to the first number, providing a base hit. We like base hits. Base hits put you in the Hall of Fame. You never know which ones are going to give you the rocket ride. This was like a bunt for base hit. And then they bantered about the third number, bounced around, back to the second number. No great shakes for Snowflake, but we certainly had the zone that was support and bounce around zone, chop shop formation zone for the majority of the day. What's going on with Camp IWM? Interestingly enough, they neglected to fill that gap this morning. The high of day was 216.37. The gap is 216.58. There are no accidents nor coincidences in the market. They didn't fill the gap by choice. They had every opportunity to get up there. They could have done it. They chose not to do it. That's a sign and or signal of two things. A, really, really weak. The market's going to sell off a whole lot more than you saw today. Or that's not even close to the destination, and they're going to ultimately blow right on through that number after eating some time off the clock. going sideways like they've been doing for the last 4 days or so. One of those two things is going to happen. Now, what about the folks down at the transportation department? Look where high of day is. Hitting that top trend line on what we call in the trading parlance a bullseye. Do you think they know about that trend line? Absolutely, they know about that trend line. It's all about where they close. Not necessarily for the day, but we're going to use a weekly close for this. Above the trend line, they'll be breaking out above the trend line, a weekly close. Go down to the bottom, below all the moving averages, and you have the flip side situation. The IWM is my favorite market leading indicator. It was down on a percentage basis, just a touch or a tad more than the SPY, not enough to make a federal case out of it. And the transports, I'll mind you, was down less than the spiders were down. So in a sense, there was a touch, a very small touch of relative strength. But again, nothing to great shakes, nothing to write home about. So we'll just leave it alone and move on. Always want to note that the transports are my second favorite market leading indicator, but a number one canary in the coal mine. Now, where you did have some relative weakness was with the Q people. They came right into that 50-period moving average, and that's where they settled in for the most part. Nice reversal candle, an uptick on volume, not tremendous volume, but decent volume. Down 1.59% today against the SPY that was down less than 0.8%. We're going to say that's a puzzle piece. It's on the table. We've got relative weakness with the tech space against the SPY. That's worth a puzzle piece. It's on the table. We're the umpire calling balls and strikes. What about the XLF? We have the opposite situation. Up just 25 cents today, about 0.5%, a little more than that. But what they're doing above all the moving averages around the all-time highs is eating time off the clock, building energy around the all-time highs to do what? To bust through the all-time highs. That's what they're doing. Remember, we're the umpire calling balls and strikes. That's what we see in the XLF chart. All charts are independent of one another, but yet all charts act and react the same way. We don't care what the name on the chart is. All I'm saying is this particular chart is eating time off the clock near the highs. And when you look at it from a monthly chart perspective, it's pretty simple to understand. They broke out last month. This month tested the last month's breakup candle low, rocketed right back to the all-time high. Nothing more, nothing less. When you look at it from a long-term view like that, that is, in fact, the conclusion, not the triple top stuff that a lot of traders want to talk about. That's not really what's going on when you pan back a little bit and look at it from a bigger picture perspective. That's what makes a market. 2, 10, 20, 100, 1,000, any number of people look at the same data sets, the same information, the same charts, but they don't all come out with the same conclusions. That, my friends, is what makes a market. And another bona fide reversal in Smashmouth, the Philadelphia semiconductor space, that's a good proxy for the tech space as a whole, at down $8 today, a little more than that, or 3.28%. Nice reversal candle, nice uptick in volume, not tremendous volume, but certainly reversal volume or reversal candle after hitting yesterday and today the 50-period moving average and finding a rejection up there. Now, they could still eat some time off the clock, have a short or a shallow garden variety retracement, and go up again, but we're just playing this at face value and saying, look, you have a significant lower high. So you have a high, and then you have a lower high right now. Doesn't mean that won't be the case, let's say a week or two from now, maybe they do go back up, and you won't have this lower high right now, but right now, you have the lower high. So we take the market at face value at present. You have a lower high situation and not even close. When you look at the comparison, look where the spider is approaching the all-time high. You look at Smashmouth, not even close. It's an of note puzzle piece on the table. You don't have what you don't have. Sometimes it's not what you do have. Sometimes it's about what you don't have. You don't have the semis confirming a breakout situation where everything goes to new all-time highs again. Not just yet. I think that's important information from a knowledge-based perspective. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.